Have you ever wondered if it's possible to start investing with as little as $50? Well, in today's video, we're going to demystify this idea and show you how you can start investing in the stock market with just $50. Yes, you heard that right. You don't need to be a millionaire or have large amounts of money to make your first investment in the financial market. The secret is to start small, but strategically, and to learn the tools that will help you grow. First things first, it's important to understand that the stock market can seem intimidating, especially when you're still new to this world. But the good news is that today, there are accessible tools for anyone, including young people like you, who want to start investing and benefit from one of the best ways to grow your money over time. If you're ready to learn how to invest with just $50, and more importantly, how this amount can turn into a prosperous financial future, you're in the right place. Let's start with the most common question. What can you do with $50 in the stock market? You might even ask, is this really enough to get started? The answer is yes. With $50, you can already buy stocks from big companies and start building your investment portfolio. Today, more than ever, the stock market is accessible to anyone who is willing to learn and take action. But of course, there are some key points you need to understand before diving headfirst into the market. Now let's talk about the concept of stocks and what it means for an investor. When you buy stocks, you're buying a small part of a company. This means that by acquiring stocks, you become a shareholder and gain the right to a portion of the company's growth. Now imagine this. You bought stocks from a company like Apple or Tesla. When these companies grow and appreciate, the value of the stocks also grows. That's the secret behind investing in stocks. You're investing in the future growth of companies. Now you might be asking, how do I choose the stocks I'm going to invest in? The answer is simple. Do your homework. Don't buy stocks of just any company because they seem cheap or because someone said they're good. Invest in companies you believe in, companies that have a solid track record of growth, that are well known in the market, and that operate in sectors you understand or are interested in. But of course, for beginners, it can be difficult to choose between so many options. So a great strategy is to start investing in ETFs. An ETF, or exchange-traded fund, is a smart way to diversify your investments without needing to buy individual stocks of multiple companies. The ETF gathers stocks from different companies, allowing you to invest in a diversified portfolio with a single click. This strategy helps reduce risk because you're not relying on the performance of just one company. An ETF might include stocks from Apple, Microsoft, Amazon, and other market giants. And the best part, you can start with just $50. Now let's talk about the brokerage, the platform where you'll buy and sell your stocks. With so many options available, it can be hard to choose the right one, but the secret is to find a platform that's easy to use, offers good trading fees, and of course, has good customer support. Some brokers even offer free educational resources to help you better understand the stock market. Researching the right brokerage can make all the difference in your investment process. Once you've chosen the brokerage, you need to open your investment account. Don't worry, this process is pretty simple and straightforward. Platforms usually ask for personal information like your name, address, and some basic financial details. Once verified, you can start depositing the amount you wish to invest. Now, an important detail, when investing, always consider diversification. This means not putting all your money into a single stock or sector. Diversifying your investments reduces risk and increases the chances of having a balanced portfolio. It's time to make your first investment. As mentioned earlier, you don't need to invest huge amounts of money. With $50, you can start by buying fractional shares of big companies and over time, increase your position. A key tip is not to invest with expectations of immediate returns. The stock market has ups and downs, and you should be prepared to see the value of your stocks rise and fall. The most important thing is to stay calm and focus on the long term. If you look at the stock market as a game of patience, you'll see that the short-term fluctuations are just part of the process. The secret is to keep your eye on the long term and not sell your stocks because of a temporary drop. Often, these low points can be opportunities to buy more stocks at lower prices. This is known as buying the dip. And over time, the investments you've made tend to grow, not just from the value of the stocks increasing, but also through compound interest, which is the key to exponential growth. One of the biggest advantages of starting to invest while you're still young is the power of time. By investing early, you have a huge advantage over those who start later because your money will have more time to grow. For example, imagine you start investing $50 a month at the age of 18. Over time, this amount will multiply, and what seemed like a small amount in the beginning can turn into a much larger portfolio. That's the power of compound interest. Money making more money. You might be wondering, how do I know if I'm on the right track? Well, the secret to success in the stock market is continuous education. The market is constantly changing, and the more you learn, the better prepared you'll be to make smart decisions. The good news is that there are plenty of free resources available, like online tutorials, blogs, and even educational videos that can help you improve as an investor. Now, something important to understand is that investing in the stock market involves risks. There is no magic formula to guarantee consistent profits, and market downturns are inevitable. But with a solid strategy, like diversification and focusing on the long term, you can minimize these risks. Remember that the market is volatile, but historically, stocks have proven to be one of the best ways to grow wealth over time. So what's the moral of the story? The most important thing is to start. You don't need to wait until you have a lot of money or become an investment expert to take the first steps. With just $50, you can enter the stock market, learn from the experience, and build a solid financial future. If you like this video, don't forget to like, subscribe to the channel, and hit the bell icon to not miss any updates. And of course, if you have any questions or want to share your stock market experience, leave a comment below. I'd love to hear how your journey is going. Remember, the stock market is a game of patience, but with the right strategies, your money can grow significantly over time. So what are you waiting for? Open your brokerage account, make your first investment, and start building a promising financial future. See you in the next video, and happy investing.